Ladies and gentlemen, we are going to go over all our current macro views on the market, just looking at like a 30-foot level, what we're thinking, what we're doing with our own portfolios, and how we are going to play these upcoming weeks and months. Right now, we're going to look at the S&P, and here's what I'm going to do. I have about 12.5% of my portfolio in cash right now, and I am with the rest of that, I'm pretty much long, and I want to buy some volatility because just looking at this chart right here, we're looking like we could have made lower highs, and if this is going to happen, we'll make another lower low. And if we are in the start of a deep or steeper correction, then I want to make some gains on that or protect some of my portfolio. So let's say with that 12.5% that I have in cash, maybe I take 6 or 7% of that and buy some long volatility. With that, I'll just be buying puts on some companies. I'm not too sure what exactly I want to buy these puts on, but I'll probably find some over leveraged tech companies, even though they've already gotten smashed. There's a few out there that really still have some room to go. I might even dip into some of the value plays that I've been long for all this time, just because if everything comes down, I mean, if stocks come down, everything will come down with it.
It would be a micro tragedy.
You've been waiting to drop that one the whole day. And other news, if you have been following us for a while, I have completely sold out of my Zim position. We were at about 6. I don't know. I think we were talking about this around like 45. It's now at a little over 70. I've sold everything, all my calls, and with those profits, I pretty much put all of them in GME, as me and Justin are so famously for. Yeah, Zim has had a nice run up. It really, I mean, they're still a great company, and I plan on buying them in the future, but I have more bearish outlook for the stocks as a whole, and I had mainly options on those positions, and they were just really, they were just extremely in the money, and the volatility was really high in them. So I said, screw it, let me just sell these and put the capital allocation elsewhere, which we think is potentially GME, as that is a way to go long vol if it plays out. But with this, say 6% of my portfolio that I'm going to buy some hedging with, I think if this does play out, I'll probably put half of that into GME because it is such a timely and asymmetric bet. So Justin, what else? What are you looking at if we go into all the indices and just as an overall whole?
So the thing that caught my so Josh, you're very much more the market guy than I am. My bag is really real estate, is what I'm in. But the two things, and I think we might have mentioned this earlier, and people are probably already aware of this. This is old news. Is I wanted to call attention to Netflix as well as Meta, aka Facebook. What's interesting is right around it was earnings, right, Josh? You saw this drop off in after hours right here. This is excuse me. This is Netflix that we're looking at right here. After hours drop off. Same thing in Facebook earlier this week. You had this after hours drop off reportedly when they missed earnings. I don't know what's going on here, but I find it very interesting that the FANGs are taking a beating, and that the beating always occurs in after hours. I don't know what to make of that, just beyond the fact that if somebody is using FANGs, or the Facebook, Amazon's, Netflix, whatever's, Google's as collateral for whatever they need to have collateral for, this would otherwise impair that collateral. I don't know what the big picture is going to be on this front, but I find it very interesting. And just to kind of mention GME in this situation too, GME from this week, or at least for today, kind of mirrored what the market did in general. Volatility at the beginning dipped towards the middle, and then kind of had a small run over into close, and that's basically what happened with the market today too. So the reason I mention that is I find it very interesting to see the correlation of GME to the rest of the market. Also, crypto had a good day today as well, and the crypto thing kind of brings up the other question I ask is, to what extent, and I don't know the intelligent way to say this, but this is my thinking, and perhaps maybe a viewer or commenter can better express this question than I can articulate it. Is that it's this: to what extent does crypto, like Bitcoin, for example, serve as collateral, and how does it serve as collateral for other classes of investments besides crypto? So, for example,
I just think it is just the ideal risk on speculation. If risk on is you want the most asymmetric, high volatility to the upside type of play, and that is crypto. So when we see a risk on event, you want to own crypto. I think that's why we see such a correlation of these high FANG tech stocks and other risk on assets. I don't really know what its purpose is in this collateral, but when we see these risk off events, of course, the first thing to go is going to be the most speculative instruments, which is crypto and these high flying stocks. But with these 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 massive drops in the meta in the Facebooks and the Netflixes after hours just dropping 20%. That looks like a liquidation. And what me and Justin are kind of speculating on is what if these guys are getting starting to get liquefied and they're getting margin called and they're just covering their positions. And I mean, someone like Melvin Capital owns like 2% of Facebook, and it is just a lot of speculation. And I'm not sure if that number it might have been 2% of Melvin's was Facebook, or was 2% of Facebook owned
Yeah.
by Melvin Capital. I'm not entirely sure. I just know, what if these guys own these high flying tech stocks and they have to sell to put up collateral on their short positions?
Exactly. And I think maybe the big picture is, okay, so forget who owns exactly what. The point is that the market has arguably been for what the past, what, Josh, you're better than I, for the past year, it's basically been the big tech guys. And of the big tech guys, it's the FANGs. That's what's been holding up the rest of the market. And if the people who have to post collateral to maintain what I like to think of as exotic, warehousing positions to hide short interest, but let's not go down that rabbit hole yet. If they need to post collateral, and a part of the collateral they posted is coming from these FANG stocks, and the FANG stocks go down, then the collateral gets impaired. They either have to post more collateral or do something. They've got a problem, whatever, right? So right here, Josh, we can see that on the 3rd, because that's the data's reported one day after. So here we are on the 4th. You can see the short volume creeping up. One of the, and so I say this from the hip. I say this as shooting from the hip, and so I have no idea if this is accurate or not, but this is just, kind of an idea I've been playing with, is that if you've got to archive and warehouse your short interest, and if your ideal preference is to do it in, these exotic transactions that are opaque, so you can't really see what's going on, that's going to be your first choice. But if for whatever reason you can no longer maintain or continue to support whatever these transactions, perhaps you don't have the collateral to post or whatnot, you've got to do a more blunt way of going at that. So that might be actually just directly borrowing shares. So in the case of the GME saga, what's particularly interesting is that you've seen the volume of shares to borrow shoot up. And what's more is that you also see the rate to borrow these shares shoot up. And again, without any type of scientific, backing on this, it's been about hovering, zero, or not say zero, but that's like 1% or whatever, right? But then we're starting to see it creep up and creep up to 3, 4, I think 5% was the highest one that I saw earlier today from Super Stonk on one of those things. But just kind of, I note that it's being interesting, it's one of these ripples that I think we're seeing coming out of, this dark, opaque world. Anyways, was that. The other thing, just to give a hat tip to, is one of the main people who I think is a voice that people should listen to if they're, keen on understanding the mechanics behind how this, situation, the GME short situation, could evolve, is Dr. Suzanne Trimbath. And she wrote a book, I don't know how many years ago, but she finally got the Audible put up, and I'm a big Audible fan because I like to listen to Jam Car, whatever. So download that, listening to it right now. We'll try to do a report on it later next week. But again, if you are looking to learn more about the plumbing of how the market works, she's a PhD. She used to work at the DTC. She was in charge of settlement. So maybe, in a sense, what Joseph Wang was to the repo desk at the Fed, Dr. Trimbath might be to the mechanics of how stocks actually settle in the DFMUs. So if you're looking to educate yourself, good spot to go.
Yeah.
And
something else that I think that we should really add is the 10-year yield. That is just it's rocking up towards over 1.9%, which is really getting up there, and that is going to put massive pressure on these high tech zombie companies that are just reliant on extremely low debt. And we have the Fed tapering, so I think there is a lot of headwinds in the current market environment, which is why I'm going to buy some protective puts on some of these companies that would do bad in a high yield situation, because they have so much debt, and they're it's like buying a house thinking, oh well, house prices only go up, so I don't really have to worry, I can just refinance. And yes, that is the case if housing prices are going up, or the same thing, these companies can always refinance their debt if yields are always going down. And there's just so many companies out there that would just get absolutely crushed in a situation with yields going up, which is why shorting some of these companies could be highly profitable if it plays out in the time horizon that I'm looking at. I'm looking on a much shorter time horizon than most.
So, and Josh, in fluff news concerning GME, one of the central villains to the GME saga is a certain Mayo enthusiast who's based in Chicago and might just happen to be in charge of one of the large hedge funds and market makers in the area. Anyways, he's got 2 private jets. At least that's what the current theory is right now on Superstonk. And what's interesting is that these two jets basically ended up in the northern part of Finland. So the first thing is, number one, why are you going to the remote parts of Finland? I mean, well, that's the first, besides just vacationing or whatever, right? So there's that. But the second thing is both these jets kind of flew in and they didn't fly into the same airport, but close enough. The other thing to note is that for all our viewers, not to turn this into a geography lesson, is that basically they're like in this part of the right there, and that kind of that part of Finland. But this right over here is Russia, and so there's always speculation of, well, maybe there's a third or fourth or fifth person that they want to meet up with in this front, or if you ever wanted to jump off one jet, drive into another country, jump on another jet there to go to a final destination, it might be a way to hide that to hide your or to not hide, but to remain very anonymous for that. Again, pure speculation, tinfoil hat, take it with a grain of salt, but it's one of those interesting things I think to follow from
I
time
just
to
like
time.
my boy Mayo Lover
Mayo,
54.
Mayo.
So basically, just to recap, these are just kind of our current thoughts on what we're looking at right now. I do think the yields rising are something to be very, very cautious about and watching very adamantly, because if we see the 10-year go to 2, 2.1, 2.5, like that is going to put massive amounts of pressure, especially with the Fed coming out and saying that they want to raise rates and actually do some QT, which all these things are just headwinds for the market, which is why it just looks like we could potentially see some. It looks like we saw a higher low. I mean, a lower high, and let's just see if we see a lower low. I'm not too much of a technician when it comes to the markets, but I do like to look at it as a indicator. Anyway, this is what we're doing. I would highly recommend you do the opposite as fading our trade. It would be one of the most profitable things you have ever done.
Yeah, and what I will say, Josh, too, is that when I look at the GME side, so as a real estate guy, I take a much more longer view on the things. I get the vibe. I can't prove this. This is just my gut talking, but boy, does it confirm my biases. So be very, very suspicious. But I get the sense that if they're having to go through and directly borrow shares, they're running out of options. So they're running out of options. That means they might be becoming desperate. We'll see. We'll see. But I'm very curious to see where this goes, and I still stand by my original shoot from the hip date that if for no other reason, we're going to see action on or about the 16th and the 17th, because the 16th.
By the way, we do have a extraordinarily expensive dinner on this date. If it does happen, if let's say GME starts going up on the 16th, 17th, 18th, plus or minus one day, then I owe Justin a very extraordinarily expensive dinner, which I would be more than happy to pay. If not, then Justin owes me one, which I will take very graciously as well, because
the dollar menu at McDonald's. Dollar menu at McDonald's. Here's your kiddie meal.
maybe we'll both be broke, but at least Justin will owe me a dinner. If not, then we both may have a few bucks.
Yeah. But anyways, that's just pure
See you guys
speculation.
next time. And if anyone sees Mayo enthusiast, then we would love to give him a big fuck you.
Josh, until next time, take care, sir.